Good morning, everyone. This is George Bayruthi from FS Securities. We are an education and information firm on the Gold Coast in Queensland, Australia. And every Monday morning, I go through what happened over the week and try to forecast what we are likely to see this coming week and beyond. Of course, we try to see what is hot and what is not, what you should hold and what you should fold. And by the way, we would appreciate any feedback if you have any, and we'll give you the address at the end of this presentation. Well, Australian shares were set to rise at the start of this week, which is this morning, pairing some of the losses that we've seen last week. We've seen the American market plunging on one day, and then on Friday night, Saturday morning, we found that it recovered a little bit, as you can see here. Anyway, what we've got here at the moment is that the Dow was up 1.9%. The S&P 500 was up 1.3%, the Nasdaq was up 1%, and in Europe, the Stoxx 50 index, which comprises most major European markets, was up 0.3%, in London was up 0.5%, and in Germany was down 0.2%. In Japan, the Nikkei index was down 0.8%, and in China, the Shanghai index was up 0.2%. On our market on Friday, we were down nearly 1.9%, 112 points down. And the futures this morning are indicating that most likely the market will open 24 points higher at the start of trading. And gold was trading at 1,737 and 30 cents, that's US per ounce. Silver at $17.48, down 2.3%. And Brent oil finished at $38.73 and $36.26 for the West Texas crude oil. The Australian dollar trading at 68.7 US and will give you 61 euro cents, 54.8 British pence and 106 New Zealand. And we like to look at what happened over last week in total, and then you can see what happened over the 2 weeks combined. So whatever happened 1 week is not really enough as long as you can take it into consideration within 2 weeks combined. So for instance, the Dow last week was down 5.6%. However, when you put the 2 weeks together, it was almost steady, it was up 0.9%. So the losses we've seen on Thursday night, well, all of that, managed to recover over the last week, and as well of what happened on Saturday morning as well. So 5.6% down over 1 week. Put the 2 weeks together and it's up 0.9%. The Nasdaq was up 1%. The S&P 500 over 2 weeks was almost steady. And the US dollar was, let's call that steady. Our Australian dollar over the last 2 weeks was up 3%, even though it lost 1.4% last week. However, over 2 weeks combined, 3% up. And in terms of gold was up $48.70 last week. But when you put the 2 weeks together, you find that gold was down $5.70. Silver was 9 cents last week, but actually it was down $1 over 2 weeks. That is 5.4% down over 2 weeks. Light crude oil down 7% last week, however, up 2.7% over 2 weeks. Why we like to compare 1 week and 2 weeks? Because obviously if we have 2 weeks of continuous declines, then we might see more of a confirmed trend. If, however, you see 1 week up, 1 week down, then we say that there is volatility, and we don't really know exactly and accurately what we're likely to see this week. Trend is your friend until the end. Of course, that's what we always say. And anyway, if you're interested to trade any of the other commodities like corn, soybeans, coffee, cocoa, sugar, live cattle, all you have to do is talk to us. Now, looking at the chart for the Dow, you can see that last week almost was down beyond all the gain that we've seen the week before. But you see the red candle is slightly smaller in length than the green candle, and that's why we've seen a slight improvement in the market over 2 weeks combined. And this is what happened on Saturday. The market went up and down and up and down and finished more or less where it opened. But where it opened was higher than where it closed the day before. And remember that pink line is the 100-day moving average, and a lot of algorithm take that into consideration. The 200-day moving average also, it could be the resistance. The 100-day moving average was the support, and that's what we've seen in the market hovering between those two moving averages. However, if you look at the parabolic stop and reverse, it turned bearish, obviously because of what happened 2 days ago that pushed it down. And when we look at the stochastic, well, the stochastic was actually started to drop even 3 days before. Look here, you can see the market, the red was starting to be above the blue. We were still above the 80%, that's still bullish. However, when it dropped below it, then we knew that we are in a bearish stochastic indicator trend. When we look at the 9-day moving average over the 21, we're still bullish, but we see here it dropping below it, and it looks like it wants to cross below it. Well, there is a convergence here, and because the convergence is on the negative side, again, the market at the moment wants to go down, but it wants to go up. I think we can see the next few days it's going to hover between those two lines, the 100-day moving average and the 200-day moving average. The good thing, however, for the very long-term investor, the 50-day moving average was well below the 100, the 100 was well below the 200. Well, of course, they take a long time to change. The 50-day moving average started to turn around, and by the way, if we see the 50-day above the 100, that will start to confirm that there could be confirmation of that actually the market is likely to go higher. We'll see, and we'll have to wait and see. Now, in terms of our mechanical system that we have designed over many years, what we see here at the end of the week, each week we look at all the indicators, and obviously at the start of the week we look at the last forecast here. So that's actually on Saturday morning. The Dow was bearish for the very aggressive trader who actually trades in and out every morning or every day. And for the Nasdaq, the investor who actually invests over much longer term, he's still bullish and has been bullish for a long time. The Nasdaq, of course, is a technology index and has a lot of information technology as stocks. Now, the thing that we are very worried about, the VIX, which is actually the fear gauge, has been bearish for several weeks. For the first week in 3 or 4 weeks, we've seen now for the very aggressive bullish. It means that the VIX, the fear gauge, is now actually is telling us, guys, the market is now very worried. There is more fear in the market amongst the investors and traders and the very aggressive traders. So beware. Gold started to turn around last week, and because of the indicators on Saturday morning, we turned all bullish. However, silver is bearish for the very aggressive and bullish for the investor. West Texas crude oil, bearish for the very aggressive, and for natural gas, you can take your pick. It doesn't matter who you are, whether you are an investor or a trader, we are bearish on natural gas. The Australian dollar, we turned bearish after we had several weeks of bullish movement. Remember, at one stage, our Australian dollar was below 65 and managed to reach above 70, slightly above 70, about a few days ago. However, at the end of the week, we turned negative, even though we're still above the 65. We're trading at the moment around 68. Now, for the daily, these are changing every day. And of course, don't worry about this because that's actually what compares with what we've seen here on the weekly. However, on Friday morning, before the market opened, we were actually bullish for the Dow. We were bearish for the wheat. We were bullish for the orange juice, and we were bullish for the Australian dollar and bearish for the American basket of currencies. Again, all these slides will be on our website very shortly. Look at our market. This is our market gauge, the ASX 200. This is the weekly. You can see here that the parabolic stop and reverse is still bullish. The stochastic is very bullish. However, the 9-week moving average is below the 21-week moving average. It's moving towards it, but at the moment this is taking much longer time because we're talking about weekly moving averages. And here we had the squeeze in the Bollinger Band, and we have a theory that when the candle dropped below the mid line, which is actually from where the 2 standard deviation up and the 2 standard deviations down show the curve here, that's the range, that is actually the band, the lower band, and that's the upper band, and that's actually 2 standard deviation amongst that line. And when the candles went below it, we continue to be below it, and now it's starting to go above it, and that's starting to squeeze. So we're just gonna keep following and study the market on a daily basis. On the daily chart, stochastic was bearish. Parabolic stop and reverse, which is actually the red dots, turn above the candle, as you can see here, that is bearish. The 9-day moving average still above the 21, so of course you've got various combination between bullish and bearish. Our mechanical system relies on at least 5 out of 8 moving averages on the weekly and the daily. The weekly gives the signal to the daily, and then provided and as long as 5 out of 8 indicators confirm the weekly signal, then we continue to trade in that direction. Of course, there will be changes during the day, the daily charts, but the week only changes once a week. Now our mechanicals, by the way, the week over the week, our market gauge, the ASX 200, is made up to a great extent by 2 major sectors, the financial and the materials. When the financial sector is up considerably or down considerably, and the materials is down considerably, guess what happens? The ASX 200 is dragged by those 2 indicators, sectors, and obviously it doesn't happen all the time, but most of the time. And you can see here, the financial was down 3.8%, materials down 1.4%. Between those 2, the ASX 200 ended up 2.5 up. 2.5 down. On the 2 weeks combined, the financial was up 3.3%, and the materials was up 1.7% over 2 weeks. So we ended up, the market overall, well, amongst the top 200 stocks, which makes up nearly 60-70% of the whole market, was actually up 1.6%, somewhere between those 2. Now looking at the best sector on our market last week, obviously was gold, and the worst sector was energy. On the stocks, we can see here the best were actually Newcrest Mine, 3.6% over last week. However, it was down 1.6% over 2 weeks. Remember, we said that gold, the physical gold, was down 2 weeks combined by nearly 5.5%, even though it was up last week. So Newcrest Mine follows more or less the price of gold. TPG was up nearly 4% last week, but it was down 3.5% 2 weeks combined. That tells you that last week 3.9% up, and obviously 2 weeks ago on its own, the market was down maybe above 7%. And when you put them together, we ended up with minus 3.5 over 2 weeks. Woodside Petroleum down 8.5% last week, 5.7% 2 weeks in a row together. But look at Bramble. Bramble down 17% over 2 weeks. So, I mean, we might look at QBE as well. QBE is down 6% over 2 weeks. We might put two case studies for QBE and Bramble. Now, our mechanical system here for the sectors, we're going to jump over the sector. We go straight to the stocks. You can see here that 2 weeks ago, or let's say 2 Saturdays ago, that's how we started last Monday. We had these indicators, and then we traded right through the week. And we ended up being bearish with the exception of Newcrest Mines. So that was contrary to what we had on Saturday 2 weeks ago. And we ended up gaining over the full week. Remember, the weekly doesn't change until the end of the week. So this is what we ended up at the beginning on Monday morning when we started to trade. And that's what we ended up at the end of the week. And remember that that's on last Saturday, 2 days ago. These were the indicators from all the stocks, and Rio appears to be bullish. We're going to see what happens at the end of the week with the results. Again, these slides will be on our website very shortly. And the daily, again, this morning we are bearish on Newcrest Mines. That's for the very aggressive trader. But we are bullish on BHP, and we've seen, by the way, as a matter of interest, that iron ore was up to 105 US per ton on the Chinese market, the futures market as well, and that's very positive for BHP today. Rio, the same thing. TCL, that's Transurban, bullish for the conservative trader, aggressive trader, and very aggressive trader. And Wesfarmers, again, the same thing. However, we got to look at Newcrest Mines and watch what happens with the gold price right through Monday, Tuesday, and Wednesday before we trade it. 3 days ago, we were very strongly bullish, and then we lost a bit of the shine, and then we ended up with a bearish indicators. Remember, again, the indicators rely on the weekly and the daily. And we combine the 5 out of 8 on the weekly, and then we go to the daily, and provided the 5 out of 8 confirms, then we are either bullish, bearish, or neutral. Okay, volume. If you see here the volume, we were high on the volume with 3 days where the declines exceeded advances. So that is actually bearish. We started to see the signal 3 days ago. That's actually what happened at the end of Wednesday, end of Thursday, end of Friday. And Friday, of course, was a bad day on our market. And week on week, we can see that for the first time in 5 weeks, the advances over the full week exceeded declines. On Saturday, when we looked at our market and see what happened on the week, well, the most active trades, stocks, at the end of the week, we've seen that Coles Group was up slightly, 0.5%. Amcor was up 0.4%, and everything else was negative. They were all active, so most of the stocks were actually in the bearish side, and they were the most active stocks. Now, we look also for stocks with average volume and what has exceeded, which stock has exceeded the 50-week moving average of the volumes. For instance, let's take this example, Wesfarmers. Week on week, over 50 weeks, it usually has 11.8 million transactions. Well, last week we've seen 14.8. So about 26% above the 50-week volume average. And the price went up by 1.8%, so that's really good. Then Newcrest Mines, over the full week, had a price rise of 3.6%, and the volume was slightly up. That's for the top 50. We have nothing on the bearish side for the top 50. Then we go down here and we see what the mid-cap, West African Resources, the price was up 2%, the volume was 170%, nearly double. Oceana Gold Corporation, 2.7% price increase over the week, 12% increase in the volume. If you look at what happened on Friday, nothing in the mid cap, up or down. However, for the mid cap, a company called Infigen Energy, the price was slightly up and slightly up in volume. I wouldn't worry too much about that. And these, of course, are for the aggressive trader, all the companies that had drop in prices if you're going to want to go bearish with high volume. So if you are in CFD trading or options trading, some of these companies may be for you. Finally, what happens in terms of the 52-week rises or declines? This is the wrong, by the way. So if we look at the 52-week highs, we've got a company called Caprice Resources. The price was 18 cents, had an increase over the full week, and actually reached the all-time high over 52 weeks of 16% rise. And again, all these companies, you may have heard of them. They've had, especially the top four here, they reached the all-time high in the last 52 weeks. Okay, in terms of companies with ex-dividends, all these companies will have their ex-date on the 15th, 17th, 18th, the next few days. And these are, by the way, our CFD trading. At the moment, we've got the ASX to 100. We've done this morning. We were up $380, but we're losing money on Flexi Group and we're losing money on Zip Company. We think that Zip Company can do well in the next few days. We just have to wait and see. And that was actually last week. We were making some very good profit on ANZ Bank, making some good profit on Westpac. We started to lose money on Flexi Group and we made some money on Boral. Okay, well, finally, the disclosure. Everything we said here is of general advice only. And please, before you take any action, please consult with us or your professional advisor. There is no guarantee that everything will happen. Of course, there are too many variables in the market. There is risk and reward. And yourself, you need to understand your risk appetite. If you have any questions, all you have to do is ask. And this is what our email address is, George@FS. FS stands for full service. George@FS Securities, plural, fssecurities.com.au. If you ring my mobile, I'm available 7 days a week, most hours, maybe at least 10 hours a day. You ring 61 for the country code, you don't need the 0. You ring 61-411-259526. And if you're ringing from Australia, you ring 0411-259526. Finally, happy trading, have a good week, and good luck.